Okay, let's unpack this. Welcome to the deep dive. We're looking at Bullish, ticker BLSH, and their Q2 2025 earnings call. This one happened September 17th after the close. And look, this wasn't just any call. First, as a public company, and boy, did it deliver some surprises. Smashed expectations.
Yeah, monumental is probably the right word for the company, for the market watching it. So our mission here is simple. Break down those, frankly, stunning financials, and also get into the big strategic moves, especially around regulation, because that after-hours pop, it tells you the market was seriously caught off guard in a good way.
Absolutely. Let's hit those headline numbers first, because you, the listener, really need to feel the scale of this beat. It was, well, shocking.
Okay, so GAAP EPS came in at positive 93 cents. 93 cents. Now, get this. The street consensus was for a loss of 5 cents.
Wait, a loss of 5 cents expected? And they print positive 93.
That's right. It's a 98-cent beat per share. Just phenomenal. Right out of the gate as a public entity.
Okay, immediate question then. How does the street get it that wrong? I mean, that's not a small miss. What were the analysts missing here? Something fundamental.
Well, I think it's two things, really. One, probably the inherent, let's say, lumpiness or complexity in recognizing some of this revenue, especially as they scale up data and institutional services. It's not straightforward. And two, the sheer profitability that came through. Net income was $108.3 million for the quarter. Compare that to a loss last year, same quarter, of $116.4 million. Huge swing.
Right. So it's not just revenue surprising, it's the bottom line conversion, an operational turnaround that just hit way faster, way harder than models predicted. And alongside that income, you had, what, $57 million in Q2 adjusted revenue and $8.1 million adjusted EBITDA.
Correct. Solid numbers, definitely, but almost overshadowed by the other big news that dropped basically right alongside the earnings.
You're talking about the regulatory piece.
Exactly. Confirmation that the whole institutional play is getting real regulatory teeth. They secured the NYDFS BIT license right before the call.
The BIT license. Okay, that's the New York one, the really tough one to get.
It's the gold standard for operating stateside, especially for institutional trust. It's probably the single most critical piece of regulatory architecture they needed for the U.S.
And that unlocks the biggest institutional pot of capital in the world.
Mm-hmm.
But it's not just New York, is it? They talked about this quad factor.
Yeah, they did. So the BIT license is huge, but it builds on what they already have. Think Germany, Hong Kong, and that UK FCA benchmark administrator license. It's about building a global regulated footprint.
Okay, let's dive deeper then. Beyond the headlines and the license, what's driving the actual business performance? That diversification angle seems key.
It really is. When you dig into Q2, you see this successful push away from just being totally dependent on, volatile transaction fees. It's their dual engine model starting to fire. The subscription service and other revenue stream, SSNO they call it, that's becoming the sticky part of the story.
SSNO. Break that down a bit. Other can mean anything. What's actually in that bucket that makes it so valuable?
Good question. It's primarily things like their data services from CoinDesk, custody solutions, some technology licensing, platform integration fees. Think recurring, higher margin stuff.
Yeah.
Stuff that doesn't just depend on whether Bitcoin ripped yesterday, And crucially, SSNO hit 45% of total adjusted revenue in the first half of 25. That's up significantly, like 28% from where it was for all of 2024.
45%, okay, that's a material shift. That's how you start arguing for maybe a different kind of valuation multiple, right? More software, less pure exchange.
Precisely. And they didn't just talk theory. They gave a concrete example, that Igloo Inc., Pudgy Penguins partnership.
Right, I saw that. What was the significance there, more than just a logo splash?
Much more. It showed the integrated play. Igloo, the Pudgy Penguins IP owner, used multiple Bullish services for their Pengu token launch. They tapped into liquidity services for the launch itself, market making, and they're using CoinDesk data and insights for ongoing analysis, compliance. It's selling a whole stack, not just a trading slot. It proves the cross-sell.
Got it. Ecosystem selling. And the scale of the core exchange, even before the U.S. market opens up for them, it's pretty staggering already.
It really is. Year to date through August 25, over $530 billion in total volume, and the vast majority, like $485 billion, was spot.
Okay, here's the kicker, though.
Right. None of that volume came from the United States. Zero. So you've got this $500 billion engine running globally, just waiting to plug into U.S. institutions.
Mind-boggling potential there. Okay, but then management talked about something maybe a bit controversial in Q2, this pricing optimization. Sounded like they might have actually shed some volume.
Yeah, they were pretty open about it. They adjusted pricing, fees based on client type, activity levels, and it did cause some, let's call them non-standard fluctuations in volume and spreads during Q2.
Risky move mid-quarter.
It was definitely aggressive. What they were essentially doing, it seems, was proactively letting go of some lower margin, maybe high frequency transactional clients, the kind that generate lots of volume but maybe not much profit, and add infrastructure cost. Management basically decided to sacrifice some headline volume in Q2 to cultivate a healthier, higher margin institutional base heading into Q3 and beyond. Fine-tuning the engine for leverage, not just size.
So focusing on the quality of the flow, not just the raw quantity.
Yeah.
That takes confidence.
Well,
It brings us back to the U.S. entry in that regulatory moat.
exactly. The regulatory story underpins the whole long-term view. The NYDFS bit license, it's the fourth pillar. It creates that quad factor they kept mentioning.
Okay, remind us again. New York.
New York, bit license.
Huh?
Hong Kong, the UK's FCA benchmark admin license for CoinDesk indices. And their setup under German law, which they highlighted, is fully MiCA aligned.
Michael, and why is that specific German piece important?
Yeah.
MiCA is the EU framework, right?
Exactly. MiCA is the markets in crypto assets regulation rolling out across the EU. Being MiCA aligned means they're basically ready for that comprehensive rulebook. It gives them certainty across major European economies. So you stack that EU certainty on top of Hong Kong, the UK benchmark status, and now the NYDFS bit license, which, let's be clear, very few players have.
And you get a real barrier.
A massive competitive barrier, especially for the big institutions, the banks, the asset managers. They need that regulatory hygiene. It's non-negotiable. Bullish can offer it globally now.
That regulatory clarity is crucial.
Mm-hmm.
Okay, so they've built the moat, they've tuned the engine for quality. Now let's talk leverage, because the Q3 guidance they put out, wow, the implied jump is huge.
It really demands a closer look. Okay, Q3 adjusted revenue guidance, $69 million to $76 million. Nice sequential growth, right? Healthy. But then adjusted EBITDA, $25 million to $28 million.
Okay, hang on. They did $8.1 million in Q2. You're saying the guide for Q3 is $25 to $28 million. That's triple, more than triple.
Pretty much. A massive sequential leap in profitability.
How? I mean, that kind of jump usually means a one-off gain or something unusual. What did management say drives that level of operating leverage so quickly?
They were clear. This is operational. It's the payoff from that Q2 pricing optimization. They pruned the lower margin stuff. Their cost base is largely fixed infrastructure. So as that higher quality transactional flow comes in and the SS&O revenue keeps growing, it just drops straight to the EBITDA line. The strategic decisions from Q2 are hitting the bottom line immediately. Tighter ship, instant profit boost.
Incredible leverage if they hit it. But we need to balance this excitement with the U.S. rollout realities, right? Management seemed pretty careful there about Q4 expectations.
Appropriately so. Their target is purely institutional. We're talking the big fish, asset managers, hedge funds, banks. And the onboarding cycle for clients like that, it's not quick. They said 2 to 6 months. Think legal reviews, compliance checks, tech integration. It's not like retail hitting a sign-up button.
It's a longer sales cycle, a longer ramp. But the advantage they have is immediate access, isn't it? Once a U.S. client is onboarded.
They plug right into the existing global order book, that $500 billion liquidity pool. It's there from day one for U.S. clients. They don't have to wait for a separate U.S. pool to build critical mass.
Got it. The infrastructure, the license, the liquidity already. Just need to grind through that institutional sales pipeline. Stickier revenue, but takes time.
Precisely. But speaking of immediate impact, you remember that news that dropped during the call about CoinDesk indices?
Oh, yeah. The grayscale product tied to the CoinDesk 5 index. SEC approval for ETF conversion.
You'd call.
Mid-call. Talk about timing. And it's a huge validator for that whole indices business. This isn't some small product. It's already got close to $1 billion in AUM. It's expected to be the biggest multi-token ETF in the world when it launches. This suddenly makes CoinDesk indices look less like just a data feed and more like critical market infrastructure. It's like a really high multiple sticky revenue stream.
Wow. Okay, that really does elevate the value prop of that business segment. Any other index products they launch will have much more credibility now. What about the options platform? Any updates there? Yeah, moving towards a full launch in Q4 this year, 2025. It's actually live already, but in a production beta phase with some major options trading firms. And given the CEO's background, he comes from deep within traditional options markets, he sounded extremely confident, thinks it can be a major winner, leveraging their existing liquidity and client base.
Okay, so let's pull back. On one side, you've got this monster earnings beat, bit license secured, index ETF approved, really aggressive Q3 guidance pointing to huge leverage, just a string of massive wins. On the other hand, the stock itself had gotten hammered, right?
Yeah.
Down like 30-something% in the month before the call.
Yeah.
Huge disconnect.
Massive disconnect. The market was clearly trading BLSH like a pure crypto beta play, selling it off with the sector noise. But this call, this quarter, it fundamentally pivots the narrative. It's not just a waiting for licenses story anymore. It's rapidly becoming a global regulated share gaining platform story. They've basically handed investors a roadmap for a re-rating.
So what are the key milestones, the proof points we need to watch for in the next, say, 2 quarters?
Okay, 3 big ones, I think. First, Q3 results. They have to hit that $25 to $28 million EBITDA guide. That proves the leverage is real, the strategy worked. Non-negotiable. Second, Q4 onwards, we need to see tangible progress on U.S. client onboarding, names, milestones, maybe even early volume indications, though they'll be cautious there, proof of execution. And third, continued momentum in CoinDesk indices, more partnerships, maybe new products announced, leveraging that big ETF win. Hit those 3. You've got multi-year high-quality growth setting up.
All right, that leads us perfectly into our This Is Not Financial Advice segment. We take the call's info and spin out an aggressive, maybe slightly outrageous, but plausible trade idea. And the setup seems obvious here, right? That disconnect, stock price beaten down, but catalyst firing off left and right, bit license Q3 guidance, options launch soon, index ETF greenlit. The market feels like it's looking backwards, not forwards to Q4's inflection.
And that regulatory moat, the quad factor, especially with NYDFS, it's a serious competitive advantage. How many competitors have that setup? Very few. It keeps others out, especially in the regulated institutional space.
Okay, so the pitch. Given the drawdown versus the catalyst, maybe look at long-dated, deep-in-the-money BLSH calls, thinking like January 2027 expiration.
Right. The rationale being you capture that operational leverage they're forecasting, which should hit soon if Q3 delivers. And the longer date gives time for that U.S. institutional ramp up, which we know takes months, maybe years to fully play out.
It's basically a leveraged bet that management executes on this regulatory advantage and translates it into that diversified, sustainable growth they're promising. High conviction, definitely aggressive.
Yeah, high conviction play on execution against that regulatory mode.
Okay, what a call. What a story developing. So wrapping up, the 3 absolute biggest takeaways for me. 1, that colossal, almost dollar per share EPS beat.
2, securing the U.S. bid license. Finally unlocks the door to the world's biggest institutional market. Game changer.
And 3, that mid-call SEC approval for the CoinDesk 5 index ETF validates the indices business as core infrastructure.
The numbers, the licenses, the products. The platform seems ready. Now it really is just down to execution, isn't it?
It is. So here's the final thought, the provocative question for you to chew on. Bullish handled over $500 billion in volume before getting into the U.S., before the options platform fully launches. If they execute cleanly on this U.S. rollout, capture even a reasonable slice of that institutional pie, how fast does BLSH stop being just a crypto stock and start looking like a global exchange and financial infrastructure powerhouse? Something to think about. We'll catch you on the next Deep Dive.